Well, hi everyone. Welcome to the Buffett and Beyond Research Saturday ETF report, June 13th, 2026. And remember, folks, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let us look at the QQQs over the past 6 months. And the first thing we want to look at is this divergence up here, bullish divergence, as the market reached a lower low. This indicator reached a higher low, and this is a very short-term indicator which can last 1 to 3 days. And so we have to take that with a grain of salt. So we're looking down here. This is the 20-day moving average, this green line in here. And what happened yesterday, well, the past several days, is we're looking at this 700 level in here. And this is very, very important, technically speaking, because the market went down this big drop this one day, which was Tuesday, but it closed above. It went way down to 686, but right in here you can see it closed above 700. Next day it went down. It closed below 700, which really scared everybody. The only good thing was that the volume, the down volume, was a lot lighter than it had been in previous tests of this 700 level. So the technicians watched this level in here, or the level of the down volume, and the volume was starting to dry up, and we mentioned that in one of our weekly newsletters. And then on Thursday, the market took off because news of there might be peace in Iran finally, or with Iran, and they're working out an agreement. And because this area had been tested successfully a couple of times here, that the market just took off. And when it took off like a rocket, which is what exactly is happening on Friday. Is SpaceX is going public. In fact, I'm recording this after SpaceX is actually public, so it's a real company now that is listed on an exchange. Now, I'm recording this Friday morning, and the market is actually down a little bit, and you would expect that after this huge run-up on Thursday. So we'll just have to see what happens next week, because we are looking at this indicator down here, which is our intermediate-term indicator, and it's got to turn up to give us a real solid buy signal. Right now, when we come back up here and look at this, the traders will use this as a signal for short term, but the investors are looking at this and saying, if I have money to commit, I won't commit until we start getting an upward movement in this indicator here. Now let's go to the volatility bands, also a different indicator up here, which is stochastics, and we can see that it wants to turn up, but with today's action, and as I'm recording this on Friday morning, today's action is not being so helpful right now, but we've got all day, folks, so it's a full day. And again, here's the 20-day moving average, and we can see that this indicator hit the top band up here, and then when it fell, went below that band but closed within it. So it's got several closes within that bottom band, or above that bottom band, which is a good sign. And now we are testing, or will test, this 20-day moving average in here, probably on Monday. Now Thursday's volume here, this green line, was pretty good, pretty decent. In fact, it's been higher than the upward volume for a couple of months now here. But that downward volume was really a big draft, as you can see these lines here. But Thursday's volume was pretty good. And we'll just have to wait for this indicator to turn, and hopefully it turns up. Otherwise, we'll have more downside movement. Now, let us see what happened the past week. So this is Thursday to Thursday, and the retail ETF is the top. So this is just 1 week now. Retail is up almost 5%. Home construction up 4.67%. Home builders up 3% in here. So where did the money go? That came out of, let's go all the way down here, that came out of the semiconductor, one of the ETFs of semiconductors. This is the XSD that we watch. And you can see the ARC Innovation, which are mostly smaller cap stocks, but they are technical stocks. They are ETF semiconductor type of stocks, and that was down 5.76%. And the S&P itself was down about 2.5%. Now, again, this is Thursday to Thursday of the changes we're looking at. Okay, so let's look at the ETFs year to date, and the XSD, which is a semiconductor ETF, was up to 100%. Oh, it was exactly 100% just 2 weeks ago. It had fallen down to 65%. Still, I mean, folks, we're talking about 5 months into the year, up 65%. And we're screaming because it was going down, because it had been 100%, and now it's up 85, call it 86%. And oil and gas, yeah, it's up near the top again. It was down near the bottom last week. It was up near the top the week before. It was near the bottom the week before that. So if you're looking at the oil and gas exploration ETF, this XOP over here, XOP, it's driving you crazy, so don't look at it. Now down here we have technology, and technology up 27%. Very, very nice for the year. But you're going to see that our picks for the technology are up higher than that. NASDAQ 100 is up about 16.88% for the year so far. And then all the way down here, financials are still lagging. Gold is down. And the ARC Innovation ETF is down a full 1.9% for the year. Healthcare still sitting right around zero. And here's one of the home construction stocks up here. Now let's look at our top stocks relative to some of the ETFs that we follow. And there's the XSD up 85, 86%. Our top stock picks are up 53%. If you just went to the computer and picked the top stocks with clean surplus ROEs above 20%, you're up 63%. So folks, we'll take either one of these if we can get returns like this for a half a year. Now let's come down to technology. And the technology ETF is up 27%. Our top stocks are up 36%. And if you just went to the computer and picked the top stocks there, you're up 24%. Now, what's the difference between our top stock picks and the computer top stocks? We will look at the individual stocks, mostly these stocks right here. We'll look at them, and maybe we'll get an indication from the projected 2027 revenues, the 2027 increase in earnings or net income, the clean surplus earnings. And so we'll handpick those stocks a little bit, but they're very, very close to being these stocks. That's why you have use of the computer program. NASDAQ 100. We were almost even with the NASDAQ 100 last week and a little bit the week before, and we had a couple of stocks that dropped. Meanwhile, the top computer stocks are up 17%, up more than the NASDAQ 100. So by picking the top stocks in an ETF, almost any ETF, you're going to outperform over a year or over a multi-period of years. Now, the S&P, we use our growth portfolio and the S&P as a benchmark, and we're up double. And we've been pretty much up double all year, double the S&P 500. So our growth portfolio is doing very, very well. Now the home builders, and why is this in blue? Because our 7.7% is a combination of the home builders and home construction, because some of these stocks overlap each other. Some of the home construction stocks are also in home builders, and some of the home builder stocks are also in the home construction. So it gets very confusing. We just put both of these ETFs together and take our top picks, and we're up 7.7%. So we're up more than the yearly home builders. And now you can start seeing that money is starting to come into the home builders a little bit. Not that the home building situation is getting any better, but people are saying, okay, can it get much worse? Well, if interest rates go up, it could get much worse. But demand is being pent up more and more, that these home builders are down. And that's why Buffett's Berkshire Hathaway bought an entire home construction company just a couple of weeks ago that we found out about it. But even last year in 2025, the Berkshire Hathaway bought into some exchange-traded home builders and home construction ETFs. So they're saying, very, very patient people, and they're saying sooner or later it'll turn around and the pent-up demand will flow into more homes being built. Now we come down here to ARK Innovation, and we use our technology ETF and the ARK Innovation ETF as a benchmark, and we can see that because the ARK Innovation has smaller stocks in it, we don't have small stocks in our technology portfolio. A lot of you are asking me and writing to me about this stock doubling overnight, doubling in a week, almost tripling in 2 weeks. Folks, we don't know how long those stocks will retain their income because it's all coming in from AI, and AI has yet to improve itself. Not that it has improved itself, but are the expectations going to be there of these big bucks being brought in by AI? So we'll just have to see. And a lot of that is going into the cloud storage facilities, and that's very, very big. And there's a lot of companies in that, and we have a lot of the companies. You have Microsoft, you have Google, you have Amazon. So yeah, you have a lot in that. And some of those technology stocks that we have are helping us get this very, very nice return in our technology portfolio. And our dividend growth and income, which includes dividends in this, is up 9.7%. And so we're happy that that kind of return. And those of you who are in a dividend growth and income portfolio of any kind are very happy with the 10% return, because some of that are the dividends, and that helps you with your portfolio as you get toward retirement. You want to be able to get income from some of those stocks to pay your bills. So we have a combination of growth, which is this, so pure growth, and then we have another portfolio that's dividend growth and income that helps pay the bills. And let's bring this chart up to date. And these are almost 5.5 year returns in another 2 weeks. So as of the 12th, which is Friday morning, we can look at the ARK Innovation Fund down 32% over 5.5 years. The S&P is up 90. The Tech ETF, which is XLK, is up 159%. But our top stocks over that same period, out of the XLK, the top stocks out of the XLK that we consider the top stocks, are up double that, almost exactly double that over the past 5.5 years. And then the semiconductor ETF, the XSD that we look at, is up 173%, and the top stocks that we picked out of that portfolio up 304%. So you can see that as you pick the stocks out of the techs and out of the semiconductors, that they've done very, very nicely over the past 5.5 years. Everybody would love to have a 300% return over 5 years or 5.5 years. So, folks, we had an unbelievable week this past week, really testing that line in the sand that we looked at here, the QQQs, really tested that several times, bounced off it finally on Thursday. Very, very nice returns, and now Friday is just digesting the SpaceX IPO. A lot of shares out there are being traded as we speak. So, folks, forget about the market. It's the weekend. Go out, go for a walk, be safe, be healthy, be with your loved ones, take your mind off the market, and folks, we'll see you right back here in a couple of days.